Let's move right on and connect then with Sanjiv Bhasin, who's joining us on the show. Sanjiv, good to have you. Let's start off then by getting a sense from you as to what the outlook is on the entire two-wheeler space. We discussed this pretty extensively earlier this morning with the Ola Electric IPO now on the cards, talking about pretty smart valuations. What does this spell out for some of the existing two-wheeler majors in terms of market share, in terms of valuation, in terms of course, competition heating up within the space?
Yeah, good morning, Avan. So look forward to a superb Thursday. Bears have been caught on the wrong foot, and the Fed now is doing what we had, been saying for the last few months, that the Fed's credibility is at stake, and now rate cuts are the part of the course. Yes, two-wheelers are in a sweet spot, and particularly Ather. Ather is owned 100% by Hero, and I think they are the ones which are going to be biggest beneficiary of the, valuation which Ola gets on the EV side. Secondly, remember that two-wheelers are anyway on a new high. So I think there is more steam there. I would also like to put on course that I think the four-wheeler space, particularly the new launch of Maruti's EV, is going to set the cat amongst the pigeon. So, take a basket of stocks, but we continue to think Hero Moto and Bajaj Auto on the two-wheeler side and Maruti and Mahindra on the four-wheeler side. Along with Ashok Leland on the CV side, are best place to buy as a basket of stocks.
I'm just going to take a minute to establish that Fed rate pause. What does that mean for India and what does that mean for the world? By way matter karta na. What it matters is that what it matters for us. Now let's look at it. Interest rates in US have gone up from 2021 to 2023. 2 years we've been in an interest rate hike cycle. When interest rates they reached 4.5 and when they reached 5, the general consensus view by global allocators was, why do we invest in emerging markets like India, where we are getting 5% or short bond yield, risk-free return 5% or a volatile projected return of 10-11%. Well, the option is you go for 5%. And that's the reason why FIs actually have not been big investors in emerging markets in 2022 and 2023. So when interest rates, they peak out, the reverse will start. So suddenly everyone will say, okay, interest rates have peaked out. Now we need to hunt for yield. And if US Fed is talking about growth contracting, that means the real economy is going to contract much faster. That's one narrative which changes. When the rate of borrowing, which is interest rates, because if Fed has moved, RBI will also move. If it comes down, then growth stocks, they tend to outperform. What are growth stocks? High growth companies. For example, Zomato is a high growth company. Paytm is a high growth company. Growth stocks, they tend to outperform. So I will not be surprised that if suddenly growth stocks, they start outperforming. Third, the leverage will start coming down. Because if interest rates, they come down, Reserve Bank of India has a pause. If they cut rates, repo rates, refinancing, everything starts coming down, bond inclusion into India, all that factor will be at play. So companies which have a operating leverage benefit when they have a high debt, they also would benefit. So these are the factors which I think would be at play in terms of the new narrative of the world. When interest rates, they move higher and when economies, they harden, typically that's the time defensives, they outperform. And I think now defensives could take a back seat. Bhasin Saab, I almost spoke like a theory professor right now, but would you agree?
100%.
क्या बात है, क्या बात है, जोरदार, जोरदार 100%.
होना चाहिए. कभी RECPFC डबल ट्रिपल है, कभी बैंक ऑफ बड़ौदा और GMR न्यू हाई पे है, because you are holding them. So believe in India, believe in the story, and look at the inward looking market, which is what you said. Now, of course, this will be a driver for technology, for listings, for the whole gamut. But the underlying remains, Nikunj, you have to be owning stock. There can be a 3-month lag on some large caps outperforming or underperforming. The broader market is refusing to give up. So enjoy the party, and it's still in young days because you have to choose your stocks correctly. So I am extremely positive, and I will still use this correction or this upside to get into new stocks which we think can outperform. I just gave you yesterday the brief on Maruti. Naukri, sum of parts, has invested 2,500 crore in 83 listed companies. Just 2 have got listed, Zomato and PB Fintech, which are worth 25,000 on a market cap of 60,000 in Info Edge. 25,000 is in 2 companies, 81 are not listed. So if you are looking for the next play on the millennials or the unicorns, then Naukri becomes a very good play over there, and so on and so forth. So we can keep on. Maruti's new launch of EVs going to set the cat among the pigeon in four-wheelers. They are raring to go. If you see, the labor disruption is over. They've got a clarity on that. So I'm looking at 12,000 on Maruti and 7,000 on the Naukri in this calendar year 2024.
Naukri, isn't the main business slowing down? Because ultimately Naukri derives large part of cash flow by jobs, and IT is where the slowdown has already happened, which is their mainstay.
Yes, but you have to take sum of parts. Sanjeev Bikhchandani is the first unicorn, and he invested very, wisely. And in retrospect, we will realize what wealth creator it has been. But we are looking at both sides of the picture. The slowdown may have been coming to an end now, and if there is going to be lower yields and lower inflation, then the US technology stocks will again start to rally. By the way, just 7 US NASDAQ stocks have run up 78%. The rest of the basket is asking to be caught. And in India, I think the hiring is again in a much better space than it was 6 months back. So some of part, this is just an opinion. Please do your own diligence. We own both Naukri and Maruti.
Okay, fair enough. That's your take when it comes to Naukri. But Sanjeev, it's difficult to ignore the fact that PSUs have had that dream run across the board. So what does one do with these stocks right now? Is the best already priced in? Is there still opportunity?
Well, that is the whole beauty of a bull market. It only keeps getting better, Avan. And if you try to book out of any of them, you've lost out on the opportunity of go. I mean, now IREDA is up 3 times from its listing price. So a lot of froth may be there, but participation is still hanky. And if I tell you, mutual funds have actually lagged the market, particularly the mid-cap performance of PSUs, because they said we will not touch PSUs with a barge pole. And look what power, infrastructure, and railways and defense stocks have done. So still bullish on a select few, but taking some chips off is not a bad deal, which is why we suggested Tata Power as a run-up to the power stock. I still think there is a lot of value in some other names, and I like this Z in particular. I mean, Z has hit a new high. You can take it down from me. The day you see the back of Goenkas, this stock will maybe double in the next 2 years. You cannot have an OTT platform and a media company like Z trade at valuations which are very below subpar. Same is the case with some of these IT names. Now LTIM, Kotak, Devyani International, a basket of these stocks can do extremely well. But please stay invested. Don't get caught up with new highs because they are here to stay.
Why do you like Devyani International? I mean, it's one space where I was reading a report. It says that there is a bit of a slowdown which has happened in QSR.
So simple, Nikunj, they are expanding their branches a lot, and that is eating to the margin because the cost structure is such. But you cannot but believe, I travel every week. Costa Coffee is eating into the market share of Starbucks. Kentucky is now catering to the vegetarian brand, and Pizza Hut is raring to go. It is even eating into the market share of Domino's, so both will survive. But their investments now will give returns over the next few months. And you're looking at one of the best QSR brands. So I am extremely opportunistic on this stock, and this actually can double from here in the next 2 years. Because the millennial spending, the type of patterns you're seeing on travel, tourism, you go to any outlet, you will see how it is. And I travel, length and breadth of the country, and airports, notwithstanding, the other branches are doing so this one-time cost will continue for a quarter or so, but look at the brand. The brand is something which is going to go to immense strength over the next 2 years.
Bhasin Saab, I'm going to discuss something which in a sense I'm yet to find an answer, and I think everybody is looking for an answer. Look, there is momentum in the market, right? If you sell now, markets, you may actually regret because there is the best of the market is yet to come. So how do you choose when you know that there is momentum, yet you want to stay committed? This is not a market where you are getting stocks cheap. So the margin of safety exactly is not the highest. But if you sell right now, you are pretty much missing out on the best part of the rally.
So that is a proverbial wisdom question, Nikunj, and it will always be there. Anybody who has taken money off, and rightly so, will be, have the left out feeling and feeling of missed out. I still think the private banks are now looking extremely attractive. The LIC, Kotak, HDFC of the world, Reliance has done nothing. Now, if you are in some of the blue chips, your participation is there, but you will not rise like 20-30% over the next month. But you are still present there. And let me also say, you are aware the biggest dumb money is the ETF flows, which sells at 15-17,000 and comes back at 21,000. They will chase large caps. So I still think there is value in large cap banks. I still think there is value in select cement plays. And like I told you, media, autos, Maruti, Z, these are giving you very good entry points. Look at the prospect of the business going forward. But I take it with a pinch of salt, Nikunj. There is no harm leaving the last 10% for someone else to gain and taking money off the table. If you are and planning a Christmas holiday, then take it in advance.
And if you are not planning a Christmas holiday, then what would be a Christmas gift?
So Maruti and Z are two names I can bet on, and I can tell you Maruti is going to new highs by the end of the year, and so is Z at new highs. The day you get this resolution by Supreme Court, this stock is going to 350 minimum and maybe 400 over the next 6 months.
Well, thank you very much, Bhasin Saab. Always a pleasure.